We've had a whole bunch of mortgage news over the last couple of months. Since October, mortgage rates on average have fallen about 1.3%, which has provided a lot of relief in the housing market and improvements in affordability. But there is no guarantee that this is going to continue. And even though there is some momentum towards lower rates, the question is, what is going to happen with rates in 2024? And critically, if rates do keep falling, what's going to happen to the housing market? In this video, I'm going to dig into these two questions. One, are rates going to keep falling? And two, if that happens, what does that mean for a housing market that has been locked up for the last year and a half? Before we get into today's video, have you guys noticed how every lender loves to talk about how easy their process is to get a mortgage? But when the time actually comes to apply, then they start asking you for your full financials, your job history since high school, and your mother's famous spaghetti recipe. You need a lender built for investors, a lender like Host Financial. Whether you're investing in long-term rentals or short-term rentals, Host Financial takes the tedious requests out of the picture. And what's better is that you'll even be able to use the actual or projected income from the property you're looking to buy or pull equity out of. So take the next step to grow your portfolio faster. Visit hostfinancial.com to request a quote in as little as 60 seconds. That's host, H-O-S-T, financial.com. Again, that's hostfinancial.com. Okay, so let's get back to our discussion about rates. And first and foremost, I want to say that although rates do look like they're going to be trending down over the medium to long term, that is not guaranteed. And even though people seem to be talking about this on social media, rates are going down, and it's going to cause all these different things to happen, I want to just give you three caveats to the narrative that rates are definitely going to go down in the next couple of months. First and foremost, rates have already come down a little bit over the last couple of months, and that's because the Fed has indicated that they are intending to cut rates in 2024. But they have no way guaranteed that, right? So the first thing I want you to remember is that the Fed is data-driven. So even though that they're anticipating rate cuts, they're no way committed to it. They're going to keep looking at economic data and decide as they go if rate cuts or rate hikes or a pause are appropriate. The second thing is that the market is already pricing in rate cuts. The bankers, the mortgage-backed security people, they don't wait around for the Fed to cut rates. They base their trades and their bets and their investments on what they think is going to happen. And so they're already reacting to what the Fed said they might do in the future. And that is why mortgage rates have already fallen since October. And the third thing I want you to remember, and this one is very important, the Fed doesn't even control mortgage rates. The Fed can cut the federal funds rate, but mortgage rates are much more closely correlated to the bond market. And even though the Fed does influence the bond market, those two things can go in a different direction. And so while I do personally believe that rates will start to come down slowly, I don't think it's necessarily a guarantee that they're going to come down a lot over the course of 2024. Given the way momentum is moving, there is a chance that happens, right? There is a chance that we end the year with mortgage rates in the low sixes, or potentially, and I think this is a little less likely, but potentially in the high fives. And the question I want to get into today, and what we're going to spend our time on today, is what happens to the housing market if rates do go down that much? If they go down to about 6%, the question is, how will they impact supply in the market, and how will they impact demand in the market? If we can figure those two things out, we have a good idea of what's going to happen to home sales volume and to prices. So let's start with the easy one, which is demand. There is a well-known and sort of obvious connection between demand and rates. The lower rates are, there is more demand. This makes sense, right? When things are cheaper, as they are when rates are lower, more people want to participate in that marketplace, which we call demand. And we've seen this increase in demand already start to happen. Since rates started to go down in October, we have seen mortgage purchase applications, which is a great way of measuring demand in the housing market, start to tick back up. So that's probably what's going to happen to demand if and when rates do fall further. But the less known, and in my opinion, the more important question is how lower rates will impact supply. So let's just take a step back here and think about this for a second. Why would rates impact supply in the first place, right? It's, the demand side of it is obvious because buyers are the ones applying for mortgages. So why do sellers care about interest rates? Well, it's because the housing market is unique. In the housing market, 70% of people who go to sell their home wind up buying another house. And so it doesn't really impact them when they sell their house, but since 70% of sellers are also buyers, buying conditions really do impact sellers. When it's not an attractive time to buy, that can mean for people who are selling, it's also not an attractive time to sell. And this is one of the main reasons we've seen supply just almost completely dry up over recent months, because it is very expensive in terms of monthly payments for sellers to sell their current house and get into a new house at a much higher mortgage rate. So they're just not incentivized to sell. So when rates started to go up in 2022, we did see demand drop, which is what we would expect, but we also saw supply drops. So the question to me, perhaps the biggest question for 2024 in the housing market is, will the inverse be true? If rates start to come down, will supply go up? The short answer is we don't know, but we can look at some research and get a clue. The first thing I want to show you is new listings. This is basically how many people put their homes up for sale on the market. And they are starting to tick up modestly. Last year, we saw new listings down year over year. They just kept going lower and lower and lower. And although we don't have a lot of data yet for 2024, the first couple of readings that I've seen showed new listings up about 9%. So that is encouraging, showing that people are getting used to higher rates. And honestly, in the housing market, sometimes people just have to sell, right? Life happens, whether you need to move for a job, a family situation, whatever it is. There's just, people won't hold out forever. And so we're starting to see that supply start to tick up, which is really good. The second thing is there is some more statistical research that shows that when rates do drop, people are going to be more willing to list their home for sale. So there's actually two different surveys I've looked at. One is from John Burns Research and Consulting. They're a great data firm. The other one, it's also been backed up by Zillow, which obviously has a ton of data as well. And what they both show, that both have very similar results. They show that when rates get to 5 to 5.5%, that is when most people who are holding out may consider listing their home for sale. So that is encouraging, but personally, I don't think we're going to get to that 5 and 5.5%, at least in 2024. I think if things go particularly well, we maybe get in the low 6s this year, but that means that supply will probably inch up, but it's not going to lead to some big flood of inventory. And I think the other thing to remember here is that inventory channels were already declining for years, even before the lock-in effect happened. So the lock-in effect has definitely contributed to a decline in supply. But even before the pandemic, we saw inventory declining for almost a decade, basically. And so even if the lock-in effect gets canceled out and starts to reverse itself, that doesn't necessarily mean that there's going to be a lot of supply. So what does this all mean? First and foremost, demand is likely to increase when rates decline. I think even that's going to happen even if there's a recession. And I know people don't necessarily think that's true, but there's a lot of historical precedent for that people still want to buy homes even during recession if rates are low. The second thing is if supply stays locked up like it is right now, that could lead to a much more competitive market with potential for high appreciation. Because I feel pretty confident demand is going to go up, but I'm less certain, like I said, about whether supply goes up. So if supply stays low and demand goes up, that is when we see really high appreciation like we did during the pandemic, and that could happen again. The other potential, though, is perhaps lower rates will sort of nullify the lock-in effect and supply starts to increase proportionately to demand. And in that case, I think we'll see a market that is reasonably flat. And maybe it will grow a little bit, maybe it'll decline a little bit. But I think the point is that it'll probably be less volatile and will be somewhere close to flat in terms of prices. But critically, it will probably increase total home sales, which will be great for agents and loan officers and basically the entire real estate industry. Of all these things, I think the most likely is the one I just said. I do think demand's going to go up, and I think supply will increase alongside demand. I don't think it's going to be a crazy amount, but I do think that they're going to go up relatively proportionally, and that will lead to a somewhat flat market in the coming year. And that is, of course, on a national basis. Individual markets are going to perform differently, but I do think that that's probably what we'll see in the national market. But there is some upside here because there is a chance that supply stays low and demand outpaces supply, and we do see some outsized appreciation, even on a national level in 2024. So that's my read on the situation. I would love to hear what you all think is going to happen if rates come down in the comments below. Thank you all so much for watching. My name is Dave Meyer for BiggerPockets, and I'll see you all soon.